Let's see what is happening with specifics in the markets. Let's start with Larry Shover. He's in the pits of the CME. We do also have our market panel coming up. Alan Lance, he's president of Alan Lance Associates, and Mark Lucchini, he's chief investment strategist at Janney Montgomery Scott. Larry, let's start with you at the CME. And first of all, since Apple, let's talk about Apple, because a lot of people are focused on that. Pretty much everybody has it in some kind of stock portfolio. Since it peaked back in September, 921, the stock has taken 22 points off the S&P 500 just by itself, 22 points off the S&P. But the market, the overall market has held up very well. It has increased despite that. That's a good sign, is it not?
Yeah, you know, it's a very good sign, David. And it really goes to two R words right now: rotation and resiliency. Rotation side, correlations are very, very low. And as you said, Apple's taken 22 points off the S&P, and yet the S&P hasn't skipped a beat. When it comes to resiliency, well, there you have it. I mean, Apple has a big, big market cap. It seems like the market's just shrugging its shoulders and wants to just ratchet itself higher, which we're seeing right behind me. Right now, we're just consolidated between 1460, 1475. And until we see a bigger uncovering with earnings, banks, techs, industrials that are starting tomorrow, I think we're going to see more of the same. It's going to be more of a broken record market.
Well, let's not forget financials. I mean, we've got J.P. Morgan and Goldman Sachs tomorrow. J.P. Morgan higher today, Goldman Sachs down just fractionally. But, you know, don't we really need financials to do well to have a meaningful rally in this market? Or do I have that wrong in some way? I mean, can we really kind of scale it when we see some problems in the financial world, at least from a hiring standpoint?
I honestly believe we have to see financials go higher. We are riding that refi wave. Mortgage growth has slowed a little bit. We're a little bit worried about net interest margin, okay loan growth. But to your point, we do need to see financials do better. In my personal opinion, and the markets around me are saying, we are underestimating that tailwind that the housing recovery is going to provide for the banking sector, for consumer confidence, for our economy in general. So yes, we do need to see financials do well, and that kicks off tomorrow.
Larry, we're going to be talking to our market guests about this coming up, but is there any kind of mood there that we may see a sell-off come springtime, and that's the time that a lot of people are saving their cash for?
Yeah, David, that's so well advertised. I mean, everybody's worried about a short-term correction, and to that point, maybe we won't see it. I mean, people are talking about the next support being 1425, the next resistance being 1500. We've gone up too far, too fast, but it's so well advertised. The macro headwinds out there, everybody knows what they are. So the pain trade still seems to be higher. It's going to be very hard to get involved in the market at this point. However, everybody's thinking we're going to see a correction. That's probably why we will not see one.
Interesting point. Yeah. Larry Shover, thank you very much. We're going to see in a couple of minutes when the S&P futures markets close, as we can.
In 2-1 now. Let's head back to the CME pits. Larry Shover, the CME S&P futures pits just closed. How does it look?
It looks really nervous right now. I mean, people, like smart traders, realize that markets have a way of moving long before the math and the headlines say so. Right now, the headlines don't think that the market should go up. But right now behind me, we're still like consolidating in that key range. People are a little bit nervous given the just amount of earnings that are coming out over the next 3 days and next week. But right now, people are squaring their positions, hoping for the best.
Thank you, Larry. Good to see you. Larry Shover at the CME.